Hi, Friday, August 5th, 2016. Monaco 64 here, home of alternative economics and contrarian views. It's just gone 8 o'clock, past 8 o'clock a.m. in London, so it's quite early. It's 3 a.m. New York time. Making a video here about the markets and what to expect today. We've got the job data in the US, the non-farm payroll number released by the government or the Bureau of Labor Statistics. It looks like the consensus expectation for the July number is 180,000 gain in jobs and a 4.9% unemployment rate. I mean, on paper, that sounds great. Of course, this number, I think, is heavily manipulated by the government. People say, oh, the Bureau of Labor Statistics is independent. I would say it isn't. But anyway, we've had some volatile, numbers in the non-farm. I think it was the May number was very low, came out at 38,000. And then you had a very strong number in June. And now we'll see what's going to come out in July. And it's going to have an impact on what the Fed does. That's why they're kind of trapped, because, they've told people that they look at unemployment and how, the labor market's doing to make their decisions. But deep down, I think they know these numbers are phony. So it's going to be interesting to see how that number comes out and what the revisions are as well for the prior numbers. They might be revised down. That's what they do a lot of times. So I'm sure it will be, the markets will move either way. So far this morning, gold is at $13.64, so it's up about $2.50. There's still still big resistance around 1366, 1365 is the high so far today, even though the key level really is 1374.75, which is the high from the beginning of July. And this is spot gold. This is not futures or anything. The Dow is up 41 points as usual. The stock market doing fairly well. We're at 18,390, so back above the high from May 2015. Currencies, the pound is up a little bit, 130, up 0.18%. Dollar against the yen is 101.12. So that's a little weaker, very, very slightly. The range has been 101.00 to 101.37, so quite steady. For the viewers in the UK and all over the world as well, because this is important, RBS, or Royal Bank of Scotland, one of the biggest bank failures of 2008, and that bank had to be taken over by the UK government. And I think the UK government still owns about 70% of that bank. Well, RBS this morning is down 4.5%, or down 8.6 pence at 183p, or £1.83. And 200 is a key level, £2. We haven't been able to break back above that level. And we've got news this morning. RBS ditches Williams and Glynn spinoff after IT complications. So, it says state-backed lender has spent £1.4 billion attempting to create a separate system for new bank. So it looks like they've wasted more money, £1.4 billion. They also came out with their half-year results, and they lost £2 billion. I mean, this bank has been hemorrhaging money ever since it was taken over by the government. So, I've made videos, especially around the time of Brexit and just after Brexit, whether, Brexit was, and the referendum was an excuse, to bail out these banks by the back door. You know, and seeing that RBS is doing so badly now, it's not surprising that the Bank of England cut rates further, and they pumped 250 billion pounds right after Brexit on June 24th, and they've pumped another 100 billion yesterday. That's not QE, that's money to the banks, free money to the banks that they gave yesterday. And they're going to do, an extra 70 billion in QE, 60 billion of government bonds, and 10 billion of corporate bonds. So that's what's happening this morning. Not much else. And I will come back later on today to talk about, the post non-farm payroll situation. So if you enjoy my videos and my analysis and my views, please like, share, and subscribe. You can donate to our channel on Patreon. There's a link below, and you can also donate in Bitcoin. My Bitcoin address is below as well. Thanks for watching. I'll talk to you later. Bye.